Good afternoon. This is Craig Modelmog for this week's episode of Wall Street X's and O's. Today is Friday, September 18th. I would first like to apologize for everyone last week because I skipped last week. I was actually in the car driving across the state of Kansas, heading back to Lawrence, see my daughter who is a junior at KU, see my son who's an accountant for Ernst & Young. So we had a great weekend, booked back on Wednesday. And here I am. So for the series of complaints that I took, my sincere apologies. I will attempt to not allow that to happen. Again, you can tell today I'm all in. I got the headphones in, trying to really focus on the sound quality because sometimes my laptop doesn't film that good. So I have come to play today. We've got some great stuff to talk about and I'm fired up. To kick things off, obviously we've got the disclaimer. The opinions and thoughts on this show are mine. They are not a solicitation to buy and or sell anything. Investments can and will lose money, and they are definitely not FDIC insured, and that is my phone ringing. So for those of you who are tuning in for the first time, this is uncut and unedited, literally. For those of you that join me week after week, you're like, yeah, Craig, sometimes it's terrible. But you know what? That's what makes it kind of fun. It's very raw. It's very to the point. It's very focused on the facts that many times go under the radar. So I hope you enjoyed if you're joining me in here for the first time. For those of you who are coming back, thank you. Sincere thank you for continuing to join me week after week. It's a lot of fun. I think it's good therapy for all of us. I know definitely for me, because I can kind of be lighthearted and I just feel better when I get done. So thank you for appeasing me, or I can't even think of the word. Anyway, let's move on here. We've got some good stuff to talk about today. We're going to kick things off with Dave & Buster's. Has anyone ever been to Dave & Buster's? I have been once. For those of you that have never been to Dave & Buster's, what Dave & Buster's is an adult arcade that serves booze. It's actually pretty cool. You know, you can have a good time. You can play some video games, you can pound some beers, and you know, it's a good deal. It's kind of like Topgolf, except instead of driving golf balls and boozing it, you're playing video games and boozing it. On to Topgolf. I'm surprised at Topgolf there aren't more clubs that get thrown out into the fairway, you know, for people getting hammered and swinging and it slips out of their hands. I do that when I don't drink. It's usually because I'm angry because I had a bad shot and I throw my club much farther than I hit my ball, which my brother can attest to. But it's all good, you know. So I have an anger issue. I usually get it out, then I feel better. But anyway, on to Dave & Buster's. The question of the day with Dave & Buster's is, can Dave & Buster's generate $1 of free cash flow if they aren't operating at a 75 to 80% capacity? Survey says no, because they said yesterday that unless they can refinance some of their stuff and have some additional funding from creditors, they are going to be filing for bankruptcy. Is this kind of one of the newest canaries in the coal mine? Obviously, we shall see. You know, the thing I think we're seeing is you've got a lot of deleveraging that's awaiting every consumer-facing enterprise in America as well as around the world. And we're coming to that juncture. I've been talking all along here that the end of August into September, we could see this transition period because we had this huge closing down of the economy in March. We had this huge reopening. Now we saw a peak in June and July that now we're starting to see reality start to set in. And in some of the things we're seeing really isn't that exciting. If you remember back in June, I made a pivot towards more of a stagflation type environment where I said we're really seeing growth decelerate and we're seeing inflation accelerate. Fed Chairman Powell came out the other day and said, hey, we're going to have lower till through 2022. Why did he pick 2022? It's not magic. We're at that time of the year in which they add another year for their projections from a Federal Reserve standpoint. Nothing fancy. He tried to put a new spin on no news. It was actually garbage. In fact, I think he was sitting up there and trying to lie to the public because he seemed very nervous and on edge, trying to paint this picture a lot prettier than it is. It's kind of like the wildfires in California, in Colorado. You know what? The leaves are getting ready to turn. I can't freaking see them because there's too much damn smoke. So anyway, that's kind of crazy. All right. Moving on here. What I'm really concerned about, like I said, I'm really seeing stagflationary number pressures now. That should persist. I think that has the highest probability of persisting through the fourth quarter. Although since August, mid-August, end of August, we saw the NASDAQ, S&P, Dow all set new highs, particularly focusing on the NASDAQ here. Since then, the NASDAQ is off in excess of almost 11% from its high. Okay, yikes. Should this continue, I could see us resort back into, you saw the V, and we were talking shapes that one year or that one show. Is it a V? Is it a W? Is it an L? Is it a square root? That's a fantastic square. That's not too terrible. Who knows? You know, it could be a K. I saw that, the latest one, the K, you know, where people that are rich do fine, everyone else sucks. It's going to be interesting to see. But what I'm really concerned about is if we continue to see this slowdown, but then we see a reversal from a standpoint of the dollar begin to strengthen and inflation come down, this could be a real cluster. So I'm really watching the dollar very, very closely. Okay. Moving on here, what we're going to talk about, we're going to hit jobs. Duh, I have to hit on the jobs thing because why? That's an important component, it's an important cog. We're going to talk about consumer sentiment, a mobility index. Ooh, this is interesting. We're going to talk about commerce, particularly in the restaurants, and then credit, and then I'm going to wrap this bad boy up. Let's get on to jobs. I'm going to be brief here. We saw a nominal change of minus 89,000 as far as initial jobless claims down to 617,000 for the week ending September 11th. Continuous job claims dropped by 1.135 million to 10.911 million. Problem is this. Remember I talked about lagging numbers? Well, the total unemployment insurance claims, which goes through August 28th, because we lagged 2 weeks here on all this data, increased again. 28.76 million people on some kind of reoccurring claim. Now, I think that number is going to come down here over the coming weeks. Just because we're starting to see some declines, but it's kind of like we're in this period. I'm going to call it the back. So I got to adjust the ear things to make sure I can hear good. It's like the quarterback that has the signal, the microphone in his headphones, and I'm listening to the coach call the plays. There's no coach calling plays for me. We're winging this deal. Anyway, looking at the bathtub analogy, which is water coming in versus water coming out. Here's what's interesting. As we see fewer people filing for unemployment, which is, I think, going to be muffled. I think they're still going to be elevated. What happens on the other end is you've got people dropping off, meaning they exceed the government limit on unemployment and then they drop off because there hasn't been a deal to extend that. That's why this cluster is starting to really brew here. It's an interesting cocktail, as I would say. Let's really look at jobs here. Here's what's interesting. Amazon ran a job fair on September 16th. Today's the 18th. That would be Wednesday. Do you know how many people they had show up for this deal? And this was white collar stuff. So these are jobs paying in excess of 150,000. They were people doing hiring, white collar, corporate, technology, and an array of other positions. These are good jobs. 384,000 people attended this deal, virtually and in person. That's ridiculous, okay? Let's also paint this. During the pandemic, we saw nearly 40% of low-income workers lose their jobs in March and early April. If you look over the same period, 13% of white-collar jobs, that means earning in excess of $100,000 a year, were also laid off. These are the jobs that I've been talking about that I think are going to start to become in jeopardy, okay, or more pressure. Ford came out here a week ago, said they're planning on laying off 1,400 salary jobs. You had United come out and say they're going to lay off 16,000 workers unless they get a deal as of October 1st. And there's over 1,000 going to be in high management. You're starting to see pressure at the white collar level, which is the higher level of positions, which is not a good thing to see. It's just not. Okay. Moving on here, sentiment. Consumer confidence was down in July. It was down again in August. Here's some interesting stats. The percentage of consumers claiming business conditions were good declined from only 17.5% said it was good in July, to August, which dropped to 16.4%. Those claiming business conditions were bad, okay, that means they're coming out and they're saying, well, it's not okay. They're saying, no, it sucks. It's terrible. Was 38.9%, increased from July to August to 43.6%. Okay. The percent of consumers saying jobs are plentiful. I like to say that word, plentiful. It's like in the Three Amigos when they said plethora. That's another great word. Three Amigos, terrible movie, but I love the movie. Jobs declined. Saying jobs were plentiful declined from 22.3 down to 22.5, while those claiming the jobs were hard to get increased from 20% to 25%. You kind of seeing this recurring thing. It's tough out there. Okay. Looking at mobility, TSA. Okay, this is the TSA. My son has the TSA Pre, where he just can, because he's special, he applied for this special deal. So when he travels, he just goes through and he waves at everyone standing in line. He always laughs at that, and I think it's kind of funny too. But anyway, TSA Checkpoint Traveler Throughput, say that fast on a Friday, decreased week over week 6.4%. It's down 70% year over year. I will tell you this, Wednesday, driving back from Kansas, when we are coming outside of DIA, here's my measurement, okay? Tanya and I are driving. I'm like, Ton, how many airplanes do you see landing? Normally, lots of planes circling DIA. It's one of the busiest airports in the United States. You know how many planes we saw land from the time we were east of DIA till we got on E470? Only 2, okay? Travel's not coming back anytime soon, okay? If you look at Open Table, that's that. You ever booked we're moving on to the commerce side here. If you ever booked a restaurant reservation on Open Table, seating diners, so this number, the Open Table's total seated diners, okay? That's a dumb name. Open Table, total seated diners. Why not call this people making reservations online? Let's just cut to the chase here. That decreased week over week by 8.94%. Year to date, it's down 46.6%. That is not good. Weekly same source sales were down 1.1. They're down 1.2 year over year. Mortgage purchase apps were down over 8% week over week. Down to 17.2 plus, okay, year over year, because we've had this boom because mortgage rates are so cheap. Weekly railroad freight traffic, you think, seriously, Craig? No, let's stick with me here, okay? Weekly railroad freight traffic, there we go. I need to slow down. I get excited when I start spitting. I can see spit on my screen here. Hopefully y'all can't see that. Declined 18.53% for the week. Okay, that's big. For the year, it's down 9.9. Moving on to credit, commercial bank total loans and leases declined by 0.17%. To 6.1 year over year. Credit card loans were down 20 basis points to minus 9.3 year over year. Auto loans declined 1 basis point. Auto loans are pretty flat on the year. Consumer loans were up 23 basis points, an increase of 5.9 year over year. CRE loans, I don't know what that is. I probably should have researched that before I read this, is down 18 basis points. And C&I loans, again, I should have researched that, but I didn't, are down 55 basis points for the week. What's happening here is we're continuing to see this slowdown that's occurring, all right? We have people that have taken a pay cut on unemployment because the government hasn't come up with another deal. The Federal Reserve right now is handcuffed because they really can't do any more now outside of buying equities. I had a great chat with my buddy Scott, who is with one of the big groups that I really lean on, and I said, Scotty, do you think the Fed's going to start buying equities? He said no. You heard it here first. It wouldn't shock me. They will not do this pre-election because that will look like the biggest setup on the planet. But it would not shock me if after the election going into next year, if the market is continued to be unsettled, I could see the Fed buying stocks, which just doesn't work, okay? It's just not a good thing. So, you know what? Challenging days ahead. Right now, like I said, I'm really eyeing the dollar. You hear me talk about the dollar a lot. So goes the dollar, so goes the stock market and the bond market. So continue to watch the dollar. Should the market break out above 96 and change from a currency standpoint, look out. Because that would mean that we have a strengthening dollar, which means the market's going to be terrible. We're going to have growth coming down and inflation coming down, which gets us back to kind of a really nasty type of investment environment. So I'm watching that really close. Okay. In closing today, okay, Google, how many days until Christmas?
December 25th, 2020 is in 98 days.
98 days for my boy Jim. 98 days till Christmas, my man, which means you only have 6 more days after that till you are retired. So to do the math, that's 104 days. And I know he's laughing at me right now, but I love him. Other things, housekeeping. I was going to close, but I have some housekeeping. Been dealing with a couple clients on some things which have been unfortunate. Here's the deal. If you have individual accounts that just have your name on them, you need to either A, make them a joint account, put your spouse on there or your kids on there if you do not have a spouse, or you need to set up a transfer on death on your individual taxable account, bank or investment. Other thing, all your website passwords, usernames, make a spreadsheet and to let your spouse know where that is and to let your kids know where that is. I've had some situations where people have gotten locked out of stuff due to some unforeseen circumstances, and we're trying to hack into some things. It is not good. Okay, so that is housekeeping. But anyway, back on this for Wall Street X's and O's for the week ending Friday, September 18th. I love you guys. Hang in there. Have a great week. I'm excited about what's happening. These are greatly historic times. And we're going to look back and go, wow, that was big. It is reshaping how we view. It is reshaping how we do. Love you guys. Take care. This is Craig Modelmog for Wall Street X's and O's, and I am